Okay, hello everybody. My name is Whitney, and we're gonna, in the end, we're gonna really just talk about institutional order flow, and I'll state the reasons that I believe this is the only way to trade, and I will also address some of the reasons why I think, or what I have witnessed over the last few years in doing this, why 90% fail. And in the beginning, when I thought, oh, this 95% of the people fail, I didn't think that was real. I just thought it was a scare tactic. But unfortunately, over the years, I really truly believe that is why retail traders fail. But then on the other side, it's really interesting that you can have traders make money every single day. I mean, we all hear about Goldman Sachs and JP Morgan and other trading desks making money every single day. So it is possible. Now, I would like to talk about the reasons that I have come to a very, very strong commitment and understanding within my trading plan that helps me identify these areas and these traps that are being set within the markets. And that really is coming down to the point where it's very important in anything that you do, whether it's a business owner, whether you're an athlete, whether you're in a college, in a high-end college, you've got to know your competition. Then you have to know your strengths, and then you also have to know your weaknesses. And until you know those three, you shouldn't be doing anything. You should go back, back to the drawing board, if you will. And what I've done is gone back to the drawing board multiple times, and I've created my game plan over and over and over, and it's come down to this. The fact is this: I do not have a lot of money. I am a retail trader. There are others out there that have a lot more money than I do, and I'm speaking of the hedge funds and the commercial traders and investment banks and things of that nature, governments worldwide, executives of their own companies. They'll have more information and they'll have more money. And it's very important then that I don't trade against them, but I trade with them. The advantage that I have is that I am small. I'm like a little bird on an elephant's back. If I can just keep track and look to herd elephants and trap elephants, then I have opportunities and I won't get trampled on. So it's all about risk management. And I'm going to go through a quick conversation, and then we're going to go through some live opportunities, and then we can open it up for discussion, and we can go through examples if we have if they have the charts loaded up for you. Okay, so let's start with this. It's called Decoding Order Flow Volume. So whenever I do these presentations, I find that about 50% of folks that that are attending really don't understand what order flow volume is, or order flow. And really simply put, it's just the buyers and sellers. And it's the aggressive nature of that buyer or of that seller. And they will become aggressive and less aggressive at certain points in the day or the week or the month. So I'm not going to talk about any market in particular, but I just want to talk about order flow volume is based upon what's called an auction market. So it's just like going into an auction, whether it's a fish market auction, art auction, fine classic wines, classic cars, cattle, wheat, corn, S&P pits, you name it. They're all based upon an auction. So if you understand this, the foundation, the playing field, then you'll be able to understand who your competition is. Then you'll also understand your strengths and your weaknesses, and therefore you can take advantage of those. Okay, so I'm going to there's a lot more to the markets than you see, and I'm going to present why. And it's very similar to a movie. One of my favorite movies is called The Matrix, and it's about a programmer who has a feeling or a sense that there is more to life than he has this sense. He doesn't know it for sure, but he has an understanding. And I know for a fact that probably 80% of you here in this room today most likely have a sense that all you need is this little, I'm sure you're just one step away to becoming a profitable trader. Either your losses are smaller than they used to be, or you're a break-even trader, or you're even a profitable trader but is not as profitable as you'd like to be. So you have a sense that there's got to be something else. And so that's what I'm going to offer you today as we go into the matrix and we swallow the pill. I found myself needing a mentor to find the right method and in the end find the right mindset. And I found him through Simon Joseph of futuresfx.ca, is a CTA, which is a commodities trading advisor. Together we developed the Global Trade Room, which is an education site with a live trading room in the mornings and education and trading through the afternoons, Asian session and London sessions. I've recently developed RedBridge Capital Consulting, which is the name of a hedge fund I was going to start in 2003, and it failed as we went to war with Iraq. But this is the bridge from the retail side into the institutional or professional side. And along the way, as I've been teaching over the last few years, the strategies that I am going to show you today and also present, I'm actually going to let a couple students present how they are using the strategy, ended up creating this something called a Ninja Order Flow Trader. And this is, in short, it's a way to track these elephants, to see where they're trapped, to see where I might have an edge. So to better understand this, and I'm going to make this as quick as I can because I want to give these guys a great opportunity. But it's all about decoding this order flow. So it's not about just taking a bunch of time and sales tapes and filtering for large orders. I've done that, been there, done that. But it's really about the hidden trade locations and these patterns that emerge. Secondly, it's the institutional bias that I'm going to talk about. That's a made-up term, but I'll tell you why I came up with it and why it's so important. And then lastly, what's called sequencing or order flow sequencing. In other words, you can't get lost in the abyss. You can't get lost in the characters and the numbers. You want to be able to look through into the matrix and actually see the blonde with the red dress. So there are patterns that emerge, and that's exactly what the HFTs, high-frequency trading, algorithms, programs, dark pools, icebergs, that's what they look for. They look for patterns. It's pattern recognition. So with human nature, that's the only thing that separates humans from any other species is that we can find patterns. Now, the big pattern that we're used to seeing is really the tip of the iceberg. It's about 10%, sometimes 30% of what's actually happening, and beneath the surface of the market is the majority. Let's call it 70%. And I take this number, 70% of daily volume, based upon the fact that between 62% and north of 90% of the volume every single day is high-frequency trading, program-related, algorithms, dark pools, iceberg orders, and the like. And all of those, ever since back in the 2000s, we went to pennies or spread, penny spreads. It's been all about, obviously, we don't have quarters and halves and dollars to work with anymore, or market makers. So the market makers are now computers. And the market makers are basically there to create liquidity. So the programs, the institutions, the commercial traders, the large traders, they will create price action to simply create liquidity. So the end result is you're going to see a chart, a bar chart, point and figure chart, range chart, Renko chart, but all you're seeing is the tip of the iceberg. What you need to understand is what's happening beneath the surface, okay? So I'm going to go a little bit further into this, but if you choose to go down this path, you are going to enter into, it's going to be a struggle to adopt and accept this because this is not what's being taught out there at this level, at the retail level. But it is being taught at the institutional level. And as a matter of fact, I'll touch on a little bit about myself and why you should probably even listen to me. So, hello, I'm talking to you from this desk here. My name is Kai Whitney. I got my start in about 1994 to be exact, actually. But I was a fundamentalist trader. Actually, you know what? Excuse me. I wasn't even a trader. I was a fundamentalist. I was actually in charge. I was director of acquisitions for a small boutique venture capital private equity firm. I just looked at deal sheets. When that small firm went under, I went into investment banking, and I went with Swiss Bank, and this is their trading floor. So when we talk about know your competition, know that this here, just one floor, represents 2 football fields long and 1,500 traders. And this is just their one trading floor around the world. This happens to be the largest in the world, but guess what? Just across the street here in Connecticut, there's Royal Bank of Scotland, and they have 1,400 traders under a couple football fields. So these are, all over the world, and the thing that I learned during a professional course that I'd spent 2 weeks, 7 a.m. to 6 p.m. and then extended hours, we never once addressed what's called indicators. So something happened at Swiss Bank. I don't need to go into it now, but I was asked to leave. Okay, so I had a nice book there, and I sold it to Bear Stearns. And while at Bear Stearns, I had the opportunity to trade for one of the largest hedge funds in the entire world. $35 billion at the time was quite large, and this was through 2002 and 2006. I ended up leaving 3 days after Christmas in December because of my fundamental background, I saw the writing on the wall, and I left. Anyways, I sold my shares, went to a prop firm called SunGard. Now they're one of the largest behind, data providers for hedge funds behind Bloomberg and there's SunGard. There's a couple others. But I got into their capital markets desk, and I helped the desk pretty much short the financial markets till the SEC came in and said it's pretty much you can't borrow, it's illegal to short, yada, yada, yada. So then at that time I said, I don't want these restrictions, I'm going to try it on my own. So this is when I tried to take what I learned professionally and adopt to what you guys do. And I failed miserably. So now it was only after a few years that I was really able to get clarity within myself, only after writing down my business plan, finding the right mentor, getting the right mindset and method, and really coming to the conclusion that what I've been chasing, these indicators, I learned I learned from Nissen about candlestick charts, and I didn't know anything about that stuff when I was on the professional desk. It was all about order flow then. So what I've come away with this is I see why 90% of the people fail. I see why 90% of the people will continue to fail, and I apologize, but out of the folks that are here, only 10% of you will actually think you'll say, well, maybe this guy has something, maybe it's worth talking, taking a look at further. So all I'm going to do is present to you what I know from my background and my experience. I'm going to expect that you do your own due diligence. You take your own responsibility for your risks, your losses, the direction you're going to go after this speak. So I'm going to talk about why location is everything, why size matters, and then why price is not the main factor. And I'm going to, this is a quote that I'm going to start quoting myself, by the way. Remember that regardless of how good a strategy might be, if you're trading against the institutions, it is nearly impossible to make money. Okay? So trade location. I'd like for you to think about the iceberg. I'd go back to it, but I don't want to make you dizzy. So just think about the iceberg. And location is all about the underneath the surface. That's where most of the volume occurs in any market. And I'm talking about stocks, forex, futures, anything else, okay? Commodities. All the volume occurs underneath. All the buys and the sales, all the secondaries, the private placements, the dark pools, that all happens beneath the surface. The end result is a price. And because we were taught back in the day, back in the 90s with the Magellan Fund and Peter Lynch, that everything is representative within the price, we start to believe that, oh, it's just price action that's needed. Well, I'm here to tell you that price action is simply that tip of the iceberg. And it's really important to understand where your competition is trading. Where your competition is trading is within the larger areas or the consolidated areas of markets where there's a lot of volume. And the reason why they're trading there is so that they can hide what they're really doing. Okay? I won't go further into that. We can do that in the second webinar, but I'd like to also talk about size. Size does matter. When we are coming across, for instance, I'll just mention this. When I was trading for this fund, I would be distributing some shares, and it would be a few million shares, and I'd be restricted to the markets. Okay, so the market's restriction was volume. I could not be more than 10% of the volume, although I had more than 10% of that average trading or that average daily volume to sell. So I obviously knew where value was in what I was selling. And so if I knew what value was, why couldn't I just hit it all at the bid and just take it down? Well, the end result is I was restricted by the market, and it was all about location. So I would try to get as much done as I could within the high volume areas, and then as it traded outside of those areas, I would look to better my pricing by actually being a speculator. So in other words, if I was selling and the price moved outside to the top side of that area I was selling at, I would actually look to buy, and then I would look to sell again. And I can also manipulate, if I had, let's say, 1 million shares, I can also manipulate up to 10% and use that to run stops, to kind of become a market maker for a period until the end result, the direction was needed, and I can get the rest done. So that is why price is not the main factor, because all you're doing is looking at the tip of the iceberg, and there's more to the story. And I think that's it. What I'd like to do from here, oh, I'm sorry, I can't pass this up. This is the most important. I should probably have this first. It's called institutional bias. Losses come first. 2, losses are more important than profits. And 3, retail traders take on too much risk. Now, losses come first. I have to only go with my real-world example. When I was at SunGard, what we would do, we would look for liquid stocks. We look for gap ups and gap downs. We look for analyst reports, things of that nature. These were all on the New York Stock Exchange that I could trade. Then we would find 8 to 10, 12 stocks for that day, and we would put on positions before the market. When the market opened, 4 to 6 of them would show us losses. Well, maybe because this wasn't our money and we had a strategy, we would sell those 4 to 6 stocks immediately, absolutely immediately, and then concentrate and focus on the remainder that were working and manage that for the entire rest of the morning. So, but unfortunately, when I went over to the retail side, I bought something, and if it went against me, I did not want to sell, so I bought more. And the worst thing that happened is sometimes I'd be right. But more often than not, I'd be wrong, and then my ego and my trust within myself, and I would do the negative speak, and it would take me an entire week just to recover, not the account, but to recover my ego. So it took me a while to step out of it. It's such an attractive sales pitch that's out there about retail trading. It's so easy, even a baby can do it. It's so attractive that it's hard to get sucked into it, and I even got sucked into it. So when I was able to pull out and then focus on my losses, it comes to the second point. Losses are more important than profits. Now, what does that mean? Okay. Now, losses. The very first thing that when you get into a position, what is the very first thing you guys think of and gals think of? You're thinking about, yes, how much money am I going to make? Well, I'm here to say that is all wrong. Unless you have a crystal ball, unless you can actually foretell the future, you can't predict how far those or how much profits you're going to make. The only thing that you can control are the losses, and you need to be able to identify those losses before you place that trade. And then lastly, just as I was mentioning, retail traders take on too much risk, is I would buy a few contracts of the S&P, it'd go against me, I'd buy a few more. Before you know it, because margin rates are $300, $500 per contract, I'm controlling $500,000 when I shouldn't be. That becomes a very top-heavy position. and any movement the wrong way could wipe me out. And again, send me into an emotional tailspin that would take me a week to recover. How is that any way to trade professionally or to trade profitably? You end up letting your emotions run away, and and you just have no plan. You start doing things you shouldn't do. So at the end of the day, the most important thing is how good are you at controlling risk? And that's Paul Tudor Jones. So now I'm going to step aside. I'm going to let Lee take over. And Lee is someone who actually adopted this very same conversation I'm having with you. Now, of course, he was 10% of the audience that did so, so I understand if you needed to bow out now. I can respect that. The old Chinese proverb is, the teacher will appear when the student is ready. So, I'm not judging in any way, but I'm going to bring on Lee, who was able to adopt this, and I'd like for him to share, if he would, how he put this into, into his trading. Maybe it's helped him turn it around, and if he can give us a little background of his experiences. Okay? So, Lee, let me bring you on. I'm going to open up your mic. Lee, can you hear me okay? I'm going to make you the presenter.
Hi, Kai. Yeah, can you hear me?
Yep, absolutely. Hello. And you should be able to just click on a button there and have at it. Okay. And thank you for joining. Yeah. By the way.
Okay. No, you're welcome. Thanks for the invite. So, hi guys. Can I just do a quick sound check? Can everyone hear me? Okay. Okay. Okay, I'll start. Okay.
You're
so, right. My name is Lee. I'm from England. I trade out of London. Quick background to me. I've been trading for about 7 years, and I trade equities for a very small hedge fund. So I build a book, long and short portfolio over a medium to long term time frame. So I was looking to day trade as well, and I've used everything from the standard charts and moving averages and so on and so forth, and didn't do very well. So I built a very successful long-term portfolio, but did not make money on a consistent basis day trading. So I found Kai, and I love what he had to say. So let me jump straight into it, because I think there's been enough talking, and let's just show you some screens. So I'm just going to pull over this screen and move that. Okay, so hopefully everyone can see the screen, and this is a standard 3-minute bar chart, okay, that you guys probably use every single day. I sure used to. And I've marked it up, and I'll explain why in a second. Now, this is a 3-minute chart of the CL futures market. So that's oil, which is a tricky old market, but there's plenty of liquidity, and that's why I trade it. And I do very well. I make money every single day in the markets that I trade, and my risk is very, very small, thanks to the NOF product that Kai has put together, which I'm going to show you real shortly. But if I just throw a few things out there, so how would we know that these circled areas here, here, and here were areas where potentially large institutions wanted to trade, or big individual traders wanted to trade, or indeed the market was going to turn? And you may say, well, I've got a moving average that touched, or I've got a Donchian channel, or a MACD, or some weird and wonderful indicator that is lagging, and that's what the point I want to make. It's lagging, which means it's in the past. How the heck, as a trader, can I trade something based on the past? Oops, excuse me. I want to trade something that's going to tell me what's likely to happen in the future. So these areas here, just keep these in mind, are areas that the NOF product tells me where there's a potential short going to happen. This tells me where institutional selling is going to go on. And these pink lines that I've drawn in are printed ahead of time, which I will show you on the next chart. So from here, and it's going to tell me that price, when it drops, is likely to come back in the future to this level, which it did here. Okay, so this particular chart is a video. So let me just grab the video real quick and move it on. So keep that in mind. So we've got areas here. The market drops, and then over here, let me just pause that real quick. Oops, there we go. So this area here, with the software that I use, that Kai has developed, we can see what we call a block buyer is a large buyer. So why did the market drop when lots of buying activity came in. And again, the software will tell us that buyers have come in and failed to move the market up, so therefore we should see some heavy selling. So we saw it come down, and we got a nice big heavy selling area here, which was a big institution. How would we know? And I guess the question is, how the heck would we know, looking at a standard chart like this, that heavy buyers were coming in, heavy sellers were coming in, and so on. So you know, that's the sort of the basic premise, and I'm sure we all use these things every single day. But just to move this on the chart, more institutional selling came in here and here. And my question to you guys is, how the heck would you know? How would you know that the institutions are large individuals on this chart, other than, you know, a head and shoulders pattern or a pennant or a flag, which in my opinion don't work at all? You know, how would you know? Well, let me get rid of this and let me show you the NOFT product. Let me just drag this over. So this is the same chart that I showed you. So if you cast your mind back to the other chart, this was the area that I circled here, here, and here, where I said there was some patterns and some things that are going on that help us understand whether the market is going to drop. So don't worry, it looks quite confusing. It's just because you probably haven't seen it before. But let me explain. These are 3-minute bar charts, okay? And all they do is contain the bid and the ask in a bar chart at every given price, okay? So there was 31 you know, people buying or selling at this level, 42, 7, and so on and so forth. So we know how many people are buying and selling at what price and when, okay, live in the market. So how does that help us? Well, there are specific patterns that Kai has taught myself and other students. And here's one of those patterns, and there's another pattern here which I don't need to go into right now, and there's another one here, basically giving us a heads up that there's weakness in the market. Okay, this green band here is something called stacked imbalance. Again, it's another thing that Kai's put together, which basically acts as a support and resistance level. So what it does, it prints here and forward projects ahead of time where we are likely to see either heavy buying or selling, or indeed support and resistance, okay? And you'll see how that works. There's also these gold levels here, which Kai mentioned, something called an unfinished auction. Again, without getting too technical, prices within these 3-minute bars, or whatever bar type you use, unless they're capped off with 0, which you can see here and here, are unfinished, which means price is likely to go back. So do you remember I said there was some pink lines on the last screen, and the price came back? So this price here was left, but see the gold line that goes across? Oh my gosh, sorry about this. Goes across all the way to the future. That's telling us that price is likely to go back. So let me just move this forward, this video. Okay, and as you can see, price goes back to this level and into this zone that we predicted would be a support or resistance level. So that's one area that we use. So sequences to tell us what's what, and unfinished auctions, etc. We also have areas where we can show you where heavy buying comes in and heavy selling comes in. So buyers are these blue lines. So the software will print a blue line into the future and tell us where a specific size of buyers, which we can preset, has come into the market, and that gives us information, and again we can teach you how to use that. Also, we keep going through, you can see again we've had, these areas again printed, these stacked imbalance areas, which is showing us a level of resistance or support. Price chums in there. We have this particular sequence I've talked about earlier on that tells us that there's weakness in the market, and lo and behold, it goes down. Okay, so we know ahead of time it's going to go down. I'm just going to whiz this forward real quick. I'm sure you guys have got questions. Okay, another sequence here showed us weakness in the down move, so we need to ease our position or take our profits. So not only does it help us with entries, it also helps us with exits. Okay, and by the way, I only take 5 ticks risk on my entries. because of the sequences that we can see in the market every single day. 5 ticks. I used to use 15 or 20 or 25 ticks of risk. You don't need to do that. And as you can see here, another green bar is printed and another green bar is printed up here. Price goes up, stalls just here in that support resistance level, comes back down and does the same here. Again, that was printed in the past ahead of time, and we knew with certainty that was going to happen. Another sequence happens here. Those block buys that you saw on the one to death. I'm a retail trader on my day trading account. I trade CL futures only, but this product can be used for Forex, it can be used for equities, and obviously futures. Is there any other market you can use it on, Kai? I think it's pretty much any instrument, I guess, is it?
Equities, ETFs, futures,
yep.
Commodities, anything that trades.
Yep, yep. So I trade CL futures. I take on 5 ticks risk with very precise entries. I have very, very precise targets. It can be used in conjunction as well with other things. So Bill, who's going to come on in a second, is a very good Fibonacci technical analyst and wave counter. And Bill has taught me how to use those things. So you can use it if you already have a style. You can use it in conjunction with Fibonacci and Elliott wave counts if you want to support it. NOF can support that, or you can use it as a basic system. But it works. You know, I think I blew about 15 or 16 different accounts before I met you, Kai. I've spent $40,000 to $50,000 on different trading products and indicators which are lagging. And I've got to say, lagging. Everything that most people use are lagging, and they do not work. They've been pushed and invented, in my opinion, by brokers to help you lose your money. And then you come back with another account when you've saved up your $3,000 or your $5,000, and you go again, and you blow it again, and you buy another package and another tool, blah, blah, blah. I'm sure that sounds familiar to most people. I've been there, and I no longer live in that world. I live in a world where I can see what's happening in the market. I understand it, because, Kai, you've given me some fantastic training, and there's some video series stuff that I still watch just to remind myself. And I trade every day in the market, and I make money, and I haven't had a losing day in over 4.5 months, and when I do, it's small. So I don't know what else to really
I was just going to mention, what do you think that made this differently, and I think it might go back to, maybe we're ready to see the underneath the market versus just the surface. But one of the most important things I will tell you guys this: I've been teaching the same methodology that went into the development of this NOF for the last 2 years to probably well over 200 people, okay? And I just want you to know that every single thing that you're seeing here, the red colors, the green bands, every component of this I used to do by hand using multiple charts. Now, yes, it did take a long time, but it really, really worked. And I still could not convince even the folks that paid good money to learn to trade it, until I sat in the room and I said, we have to develop a trading plan as if you're going to build an algorithm, and you need to explain every single detail to the programmer, and this programmer does not know how to trade. So once I took that step and we did this step by step in the room, part of that global trade room, by the way, it was then and only then that I said, you know what, maybe this can be turned into a program. So I only developed this to assist the traders within the global trade room, or the students within the global trade room. And it's ever since it's come into color, I guess, the reds and the greens and the blues and things like that, now everyone's able to pick up a lot quicker within days, if not weeks, and now they've come from losing traders to making 100 ticks a day, 200, 300, 400 ticks a day. Every tick is on average about $10, so you're talking anywhere between $1,000 and $4,000 a day. Now, I'm being upfront and honest that, again, I've been teaching this exact same thing, but without the bells and whistles. So the same concepts have worked. It's just the adoption of the concepts hasn't taken place until the development of this product. I hate that. That's the fact. I don't like indicators. I don't like algorithms. I don't trust any of that. I just need to see the numbers. But again, I have a different background than most of you. So it's when I was able to go back and really uncover the strengths that I have and address your weaknesses and let you see your competition in bold numbers, then that's when it finally was able to, to make sense for folks. I wish it wasn't like that, but maybe that's just the way it goes. Lee was talking about, yeah, go ahead.
Am I on? Yeah. I've just done a real quick split screen, so hopefully everyone can see. So this is the same chart with different information. So this is the standard chart that most people use, where I've indicated block buyers. We've got no idea what's going on here on this chart, but you can see here the block buyers, same chart, how all the blue lines are coming out. And it's helping me understand what's going on with the particular sequence that happens within these numbers that you teach. And look at the move. It was an easy move. It was a doddle, no heat. And that was a big old move. Now, how are you going to do that with a head and shoulders pattern? How are you going to do it with all these lagging indicators? It's, in my opinion, I hope I don't offend anybody because I've been there and I've wanted it to work badly. I've wanted these indicators to work, but they just do not. And when I saw this, I now laugh to myself, and Bill, who's the other guy that we speak on a regular basis, and Bill and I just say, wow, how could we go back to trading Renkos or bar charts, blah, blah, blah. It's just like going back to being blindfold. This just lets you see where the market's going as long as you are trained properly, because there are other footprint charts out there. But, and I looked at them all. Before I bought this product, I looked at them all, and nobody gives the training and the understanding that you give, Kai. And it took me about 2 weeks to get my head around it, study the videos. You did some over-the-shoulder training, which was fantastic. And after about 2 weeks, I understood the concept. And probably after a month, I could trade it without a problem and continue to do so. And you can trade this in any market. So I just think it's fantastic. But this, I think, just highlights to me, if I was at the other end watching this, I'd be thinking, wow, I need to stop and think about what I'm doing. Even if you don't buy the product, stop and think about what you are using and why you keep losing on a regular basis. You may have 1 good day, 2 bad days, 3 good days, 5 bad days. I'm sure that sounds familiar. So, just needed to say that because you're trading blindfolded. This is an X-ray machine. It just tells you what's going on here. Look at it. Same chart. Same chart, Kai. Different information.
Yeah, thanks, Lee. Okay. Are there any questions for Lee, or should we save the questions? Well, actually, let's save the questions until after Bill comes in. So, of course, it's very important for me to show that, of course, with my background and my experience, yes, of course, I can trade this because I built it. What's more important to me is that the message is transferable, the training is transferable, and others can do so. So let's also hear from another trader, same as Bill. Let me go ahead and bring him in. I'll make both of these guys available, but they've actually, I'm not making them, excuse me, I apologize about that language. I've asked for them to make themselves available via Skype for questions in regards specifically how it's helped them and perhaps how it can help you. So let me, Lee, if it's okay, let me bring in, let me bring in Bill. Okay, hi, Bill. I'm going to make you presenter.
Hi, how are you?
Good, thank you. Thank you for joining us as well. I appreciate you both being on here.
Absolutely.
As I talked with you guys earlier today, my frustrations that I had over the last couple of years of teaching this, quite frankly, when this was developed, you guys were, you were quicker to pick this up than the 200, 300 folks that have been learning this same methodology. Just without, I guess, the pretty colors. So I appreciate that, and please give us a little bit about your background and how you use it every single day. That you can hear it, Bill, and you should be seeing another bar chart, and this looks like a crude chart of 3-minute chart. Now again, these guys just focus on crude, so bear with it, but yes, we can hear you, so go right ahead.
Okay, great. Very good. Hi, everyone. My name is Bill, and let me just say that this toolkit which Kai has created is just absolutely brilliant. He's absolutely brilliant to put it together. And I say that because I really mean it sincerely. The bottom line is this simple, and I'm going to just be very frank and honest with everyone. As we have traded in the past with bar charts or candlesticks or whatever else we have, Rinkos, we are really trading in the dark. We're trading blindly, and it's not fair. It's not fair to you and I, and that's exactly the thought that Kai has had. As he's come over to the other side, if I can put it that way, and has become a retail trader, he needed tools that he was used to, and that's why he did the research, checked out all the other order flow packages out there, and found out that they were missing key parts and pieces, and that's why he, as the architect of this software, had it compiled by a programmer, of course, but he was the driving force behind it. Everything else that you've purchased, systems, methodologies, and courses, all have been put together most likely by programmers, and it's because they're just trying to advance the sales of their developments. This has been compiled by a former institutional trader, so that is very key for everyone to keep in mind and to really sit up and take notice. I'm going to show you a few things here. First of all, real fast about myself. I've been trading about 13 years, and I've been trading solely in futures. Did a small amount of time in Forex, nothing to even talk about. So I've been primarily trading in futures, and I've traded various instruments in futures, and I trade crude oil simply because of the volatility and because of its movement, which also equals volatility. Most people are afraid of crude oil, and that's because of its volatility. But you and I both know that there are huge and enormous swings in crude oil with the volatility, and that's how you make money trading, is when there's movement, and that's why I like it so much. And in the past, I've got my clock cleaned plenty of times, just like Lee has, and we have talked about that at length, and both knew we had to find something that was going to work, and we've tried everything out there. And so with that, when this came around, we jumped on it because we were ready. We were thirsty. And I hope you're thirsty. I hope you've had enough with trying to make that indicator to work, and it worked just great for you for 2 months, and then all of a sudden you have a streak of losses. Why is that? Well, because market conditions change, and traders are changing their behavior every day, and you lock in some thinking that, oh no, I'm not going to go long at this point because last time I went long yesterday and it picked my pocket and I lost on it. So we create these psychological barriers for ourselves all the time. But excuse me, but when you can see inside the candle, and when you can see the volume and the order flow, that changes things, and that gives you an edge as a trader, and that's what you need, and that's what you want to be able to trade successfully. Here is a 3-minute chart in front of you. It is today's crude oil. We had the market. Let me just give you a time frame as a reference. My time frame here is Mountain Standard Time, so I'm 2 hours earlier. There we go. I'm 2 hours earlier than New York, where oil's traded. So this is 8:30 New York right here, okay? And we had, okay, so I'm going to blow it back up. We had this market doing this type of action. And what on earth were you going to do if you didn't sell from the top and you were trying to get in and you had no idea which direction it was going to go? How would you know? We've had nice 5 waves up, and depending on how you count them, and if you've done fib measures on this, you've seen perhaps that this has reached a particular top, and so now you're thinking short, and the market's doing this time correcting right here, and you have no idea. You see some buying tails, and you think, okay, well, that looks kind of good. Maybe this is going to go higher. But when you have the order flow, and when you have an understanding of what's happening, you can make a decision as to whether you're going to get in a trade or whether you're not going to get into a trade. And this particular chart is the same 3-minute chart at the same time frame, and we have some sequence ordering going on. Order flow sequencing is what Kai calls it, and teaches, and it's the fact that we have evidence that this market is going to lift and is going to go like it did. And we had it here, and the market chummed for a while, and then we had it again here. These are the sellers on the left-hand side. These are the buyers on the right-hand side. And what we're looking for is we're looking for the sellers to dry up at the bottom of the bar. If we were looking to go short, we would want the buyers to dry up on the top of the bar. But in both cases,